Hello everyone, welcome to our discussion of Chapter 3 and Process Costing. This is sometimes one of the most, troublesome topics that students encounter. So hopefully we're going to be able to go through it and make sure that it's very clear and demonstrate how we might set it up in Excel spreadsheet and all that in a second video. But process costing, as you recall, is different than job costing. So in Chapter 1 we did job costing, and we learned about predetermined overhead rates. We learned about moving things from raw materials into work in process and then into finished goods. All of those things are still going to apply. We still have work in process. We still have predetermined overhead rates that we determine. We just don't do all of that by job. We do it by department. Okay? And so it's important that we understand when we use process costing and when we use job costing. When we learned about activity-based costing in Chapter 2, we can apply activity-based costing to either job costing or process costing. Because remember, activity-based costing is simply a way of allocating overhead that tries to find the best allocation. And that could be applied whether we're allocating overhead to a job in job costing or allocating overhead to a process or to a department in process costing. So when do we use process costing? Who uses it? What kind of companies? It's usually when it's continuous. It's 24/7. You can probably guess that a company that is open round the clock, runs 3 shifts, all that kind of stuff, is probably using process costing, because it's the reason why you operate in that fashion is because it's fairly expensive to shut down and to restart. So you just keep it going, all right? And that means that we have no start and stop to our process. Remember, job costing was relatively simple that way because we knew exactly who we were doing the work for, and we knew when to start, when to end, okay? This process costing is not customized for a particular customer. We're just making it a lot of it, a batch of it, or whatever to ship off, to put on the shelf somewhere, okay? And there's the idea that you can have to use one or the other entirely is not really true. It's certainly how we do the homework and things in a textbook, but in real life, companies do not hesitate to utilize kind of a combination called batch processing costing, which can kind of combine some of both. But for our purposes, we're going to differentiate between the two. Okay, we're going to have a separate work in process, work in progress account for each department. So in process costing, it may start out in the mixing department, and we might add materials to that. And then when we're done mixing, it might move to the baking department where we do the baking, and then it goes to the packaging department. That's the idea. We could have multiple departments. Someone usually works in a single department. They're assigned to that department. That's where they come. And so they don't track their hours in quite this particular a way as if you were using job costing, where you might be working on 2 or 3 jobs during the day. And once you start on another job, you need to track that. With the process costing, you probably work in the same department all day long. So it doesn't... Your labor is part of that department, okay? So we don't have quite the same specifications needed, but we still have this separate work in process. It's just that you move from one to the next as you get more completed on the product. Now, because we don't know when is finished, okay, even when a particular job is started, process costing is going continually, okay? We never really are done. We don't finish the job like it's job costing. We just keep making, let's say, cereal. It just always is happening. Okay, we might shut down for the weekend, whatever, but it literally is running all the time. So what we do at the end of the accounting period, if we're doing accounting for a month or a quarter or a year, the end of the accounting period, we just freeze the process at midnight. We just pick a time and say, at this point, we're going to pretend that everything froze and that we had to look and see where we were. Okay, we freeze frame, you might say, that process. So some stuff is all done. When we take that snapshot or freeze frame, that has already been completed and is moved to the next department or to finished goods. Okay, so those that have been completed are moved on. Okay, but what we need to do is focus on the stuff that's in process, being mixed, being baked, being whatever at the time that we stop. Okay, so those items, and it could be a lot, it could be a little. If you have a just-in-time inventory scenario, you would have very little working on at any given time, okay? But if you're more of a just-in-case inventory, you may have a lot of work-in-process inventory. When we freeze it, we have to estimate how much has already been done. So this stuff we're looking at, okay, if we freeze frame, remember, we don't really do that. There's no way to actually just freeze it. We're just pretending, okay, to do the accounting. We freeze it, and we say, okay, at that point at midnight, what percentage are we done of the total? Are we 50%? Are we halfway through the process? Are we halfway through mixing? Are we halfway through baking? Are we halfway through packaging? Whatever the process is. Okay, or are we 60%? Are we 70%? We usually do it as a percentage of completion percentage. Now, why do we so worried about estimating this percentage of completion? Because that is going to lead us to calculating equivalent units. So because some of the units we worked on during the accounting period are not complete, okay, those that are complete and those that are partially complete cannot be just added together directly. So if we want to say how many units did we do during the accounting period, it would not be true to say that we completed all of the units because some of them are only partially done. Okay? So what we need to do is some way to be able to put them on the same footing so we can add together those units that have all been done and those that are partially done. And that's what we call equivalent units. So, example, if in June we completed 40,000 units of a product, okay, those are done. Those are 100% complete. Those have moved on to another one. So that's fairly straightforward. But we have another 10,000, a batch of 10,000 units that were not complete. When we did our freeze frame, when we froze everything, they were 40% complete. They weren't 100% complete, or they would have been transferred. So we were still working on them, that we still had some work. We've done some work, okay? So we can't ignore that some work has been done on those units, okay? So what we do is we say there's 40,000 of completed units. There's 10,000 that are 40% complete. So we just multiply that 10,000 times 40% and count that as 4,000 equivalent units of work, with the idea that it takes the same amount of work, same amount of material, same amount of labor to do a unit all the way as it does to do 2 units halfway. Okay, that's what we're basing this on. That's why we call it equivalent units. Those are equivalent. So we add now that they're equivalent, we can add them together and say that we did 44,000 equivalent units of work during June. Okay? So why do we care? Because we want to know, if we can't measure how much work we did, we can't determine the cost per unit of work. Okay? And that's what we're ultimately after, is the cost per unit. And if we don't know the units because we haven't done a good job of estimating the equivalent units, the ones that are partially done, so we can add them to those that are all the way done, then we're not going to have a good feel for how much it costs to do this work. Now, in real life, okay, we may add to our process, this manufacturing process, materials, labor, and overhead differently. So, for instance, if you were making cookies, you might put all the ingredients in at the beginning before you even start mixing it. So the materials, direct materials, are added at the beginning. The labor is added gradually, okay, over the time we mix it. Okay, so those are different. They're added differently, and so we tend to want to calculate equivalent units separately for direct materials, direct labor, and overhead. Sometimes you'll see direct labor and overhead combined together, called conversion costs, but it's the same idea that we add materials and add labor and overhead kind of in a different way, and so we could have a different amount of work done. So, for instance, we completed 40,000 units and had 10,000 we were still working on, same like in the earlier slide. But they were 40% complete for direct materials, 60% for direct labor, and 80% for overhead. So we estimated the direct materials separately from the direct labor from the overhead. And so our equivalent units for direct materials is the 40,000. Notice the 40,000 for all three, right? Because all three are 100% complete for those that have been transferred. But we take our 10,000 and multiply by 40% for direct materials because they're 40% complete. 10,000 times 60% because they're 60% complete for direct labor, and 10,000 times 80% for overhead. All right, so that's the idea, that you add these things separately. Now, sometimes they aren't very different, meaning the materials, labor, and overhead are added kind of the same, and so you'd have the same percentage, and you don't have to do it separately. But we need to know how to do it either way. So once we have in our minds the concept of equivalent units, and we can calculate equivalent units, then we can enter into the process costing 5-step procedure. All right, so this is the 5 steps. It happens the same way each time. If you do these 5 steps, then you'll be able to complete a process costing problem. All right, so first step number 1 is you need to know where all your physical units are. How many units in beginning work in process, how many were completed and sent to the next department, and how many were still being worked on. So when we did our freeze frame, okay, all the physical units must be somewhere. So this has to be true. Beginning units plus started units have to equal the units finished plus the ending units. So this is how many you were working on when you started, let's say, July. And this is how many you started during July. This is how many you finished in July. And this is how many you had partially done or were working on at the end of July. All the units have to go somewhere. If we assume that it doesn't just evaporate, that things don't disappear, that things don't get wasted, okay, and that does add a little complication, but we're not going to deal with at this stage, okay, that things could disappear. But we're going to assume none of them disappear. They all are there. So if you beginning units are 1,000, you started 9,000, then that's 10,000 units. They all have to go somewhere. They either got finished or you're still working on them. Okay, that's the logic behind that. So write that out so that you know all of those pieces. Okay? Now, step 2. Estimate the percent complete. That freeze frame. And say, what percent complete are we for materials? What percent are we for labor? What percent complete are we for overhead? Okay, so we need to know that percent complete, and then calculate equivalent units. And if it's done differently, then you do it separately for direct materials, direct labor, and overhead. So we know how to add those units that have been completed and transferred, and then how to take the percent complete and multiply it by the ending work in process units to get the total equivalent units. Okay, that's step 2. And again, you're writing all of this out. You're putting it into your spreadsheet. You're not just doing it on the calculator. You're making sure you can see it, okay, and calculate it. Step 3. Now we're looking at costs. So far, all we've dealt with is units or equivalent units. We haven't even talked about dollar amounts. So looking at the work in process account, it should have direct materials, direct labor, and overhead left over from last accounting period. So if you think you got your T account, you've got the debits, okay, the debit balance from last accounting period includes direct labor, overhead, materials from last accounting period. Then your direct materials, direct labor, and overhead are recorded and are an increase to that work in process. And again, this comes from time cards and the materials that you utilize, the same journal entries that you would do regardless if it was process costings, or job costing or whatever. Okay? And the overhead allocation could be done with a single plant-wide rate or activity-based costing. So if you add the beginning direct materials costs, right, because that was included in your beginning work in process, to the materials cost added during the period, that equals your direct materials cost to account for. So you got 2 numbers. What's included in beginning work in process plus any added direct materials is your direct materials cost to account for. We need to know where all that cost went. Do the same thing for direct labor and overhead. So just make sure you know what your beginning direct materials, direct labor, overhead was, what your added direct materials, direct labor, and overhead. You've got a total cost for each type of cost. Direct materials, direct labor, and overhead. Now, take and calculate the cost per equivalent unit. Take the cost to account for direct materials and divide it by the equivalent units for direct materials. Make sure you don't mix up direct materials with direct labor. Direct materials divided by direct cost, and it's always the cost divided by the units. It gives you your cost per equivalent unit for direct materials. Do the same for direct labor and overhead. You may have, if you have different equivalent units and different costs, you're going to have different costs per unit for direct labor, for direct materials, for overhead. Okay? If you want to know what your total cost for the unit is for that department, so if you're doing all this for the mixing department, okay, then you want to say, okay, yes, that's my direct materials, that's my direct labor, that's my overhead. But what is it together? Just add them up, and that gives you your cost per equivalent unit for all of them. Step 5. Remember, this is a 5-step process, so we're getting close. This is really the end result, okay, where we actually start making a journal entry, okay? So the units completed, how many units we completed for the accounting period, times the total cost per equivalent unit. So we calculated the cost per equivalent, and we now have some really good information. We then multiply those together, and that is going to be a credit or a reduction of work in process for that department. And we do this separate for each of our departments in a process costing environment, and increases the work in process in the next department by the same amount, right? Your journal entry has to balance debit to the next work in process account, credit to the last one, or it goes to finished goods as a debit to finished goods if you're doing the last department. If that total cost per unit is also what you're going to use to record cost of goods sold. So when the finished goods are sold to customers, you're going to count up how many you sold and multiply it by that cost per unit to get your cost for goods sold, which is the debit, and you credit finished goods. Okay? At the end of the accounting period, you should have the cost of the partially completed units at the end of the period. You can check your work. Check to see that you've made the right debits and credits if you do this situation. You take the cost per equivalent unit for direct materials from step 3 time equivalent units of direct materials only in ending work in process from step 2. So remember our example, we had 40,000 units completed, okay, and 10,000 work in process, but only 40% complete. So that would be 4,000 equivalent units times the cost per equivalent unit for direct materials. Do the same thing for direct labor and overhead. Okay, this should tell us what our work in process is for that department at the end of the accounting period. So this is the idea. Your work in process account debits are any added costs. Your beginning balance plus any added costs. Your credits to that work in process account is based on the step 5, the units completed during the accounting period times the total cost per equivalent unit. Moved on. Your debits minus your credits equals your ending balance of work in process. That ending work in process can also be calculated by taking the cost per equivalent unit for direct materials times the equivalent units for each type of cost. All right? That's how you check yourself. So there are 2 ways to get your ending work in process. If you do them both ways and they equal, then chances are you have not made a math error somewhere along the way. Okay? Now it doesn't catch all errors, but it catches some of them. And then you're done, okay, with that particular department. So, we'll review. The textbook, as you're doing your reading, combines step 1 and 2. I kind of like those separated. So, if you read it through it in your textbook, it'll be a 4-step procedure because they combine 1 and 2. I think it's a little bit more clear, a little clearer if you break those into 2 steps, but it's really the same process. Okay? When the textbook or whatever textbook you might refer to other places refers to, or in the homework, production cost report is just a fancy way to show this 5-step process or 4-step process if you choose, okay, with all the numbers needed. Okay? It's not anything different. It's just simply the 5-step procedure. Okay? We are learning in this chapter and in this our homework and everything. We learned the weighted average method, and that's the only one we'll do in the homework or on tests or anything like that. Just so you know, there is another way to do it. It's called the FIFO method. It changes slightly the calculations in step 2 and 3. You still do 5 steps, Okay, you just consider things a little differently. You'll get slightly different answers. Not a big deal and not something worth learning both at this stage. Okay, certainly recommend using Excel to set the production cost report of the 5 steps. Okay, it'll help you by doing the calculations so that you don't make mistakes. And once you get it set up, you can do it multiple times. Okay. You should be aware that changing estimates, and they are estimates, right? We should be comfortable by now in accounting that the idea that there are a lot of estimates. It's not everything has an exact answer. And if you change your estimates of what percent complete you are, it will change the cost per equivalent unit. Okay? So there is room for manipulation by those who might be trying to make it look a certain way. However, here's the thing. If you fiddle with one accounting period, guess what? It's going to also impact the next accounting period the opposite way. And so if you try to make yourself look better this accounting period by, you might say, fudging the numbers or estimating in a way that is isn't really correct, that will make you look better this time, but it will make you look worse next time. And so you're just going to create another problem.